Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Now, today I want to talk about how the EU is spending more money on Russian energy than it is on financial aid to the Ukraine. According to a report by the Centre for Research on Energy and Clean Air, CREA, Finland, the EU spends more money on Russian fossil fuels than on financial aid to the Ukraine. Now, this report was released to coincide with the third anniversary of the special military operation in the Ukraine by Russia. As reported by the British newspaper and a well-known Russia hater, The Guardian, the EU purchased Russian oil and gas for $21.9 billion in 2024. And that was despite its major statements and efforts to reduce its reliance on Russian fossil fuels. The analysts have calculated this is the equivalent to spending 1/6 more amount of money than the $18.7 billion allocated by the EU to Ukraine in 2024 for financial aid, and that was reported by the Kiel Institute for World Economics. Now, it should be noted that this aid figure excludes military or humanitarian contributions. Now, the Centre's calculations also reveal that the EU spent 39% more on important Russian fossil fuels than it allocated to the Ukraine. Now, Christopher Tresbech, who's an economist at IFW Kiel, highlighted a striking discrepancy between the aid mobilised by donors for the Ukraine and that for past wars, with the European donors spending an average of less than 0.1% of their GDP per year. He said many countries have been more generous in past conflicts, comparing Germany's donations to Kuwait in 1990-91 to the Ukraine over a comparable period. Now, the report also noted that in the third year of the conflict with the Ukraine, Russia earned $242 billion from global fuel exports, and that was the revenue since the start of the war, and now approaching €1 trillion as the countries adapted to the sanctions. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSinsight.com, and further develop it. Now, you can do this by making a small donation, which is done by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you all for just watching. Also, please like, share and subscribe, and don't forget to the comments. Do love to get your comments, receive them, answer them, etc. Despite Kiel's consistent optimism, Russia's fuel revenues could decline by 20% due to the tightening of existing sanctions and the elimination of the loopholes. Well, good luck with that. That includes the closure of refining loopholes, which allows Europe to purchase Russian oil that's been refined in other countries such as India and Saudi Arabia. The Finns are eagerly anticipating restrictions on gas supplies by Turkish Stream, but Hungary and Slovakia are not going to play that game, are they? Additionally, there's a prevailing concern surrounding Russian LNG supplies to the EU. As Jan-Erik Fredrik, who's a gas analyst at Rystad Energy, observes, Russia's emerged as the second largest LNG exporter to Europe following the United States, and in some months it actually surpasses the amounts that the US provides. Meanwhile, gas prices in Europe have reached 2-year highs in the past week. In contrast to the statements made by European politicians, rumours have circulated in the markets that the region may once again increase its purchases of blue fuel from Russia. Meanwhile, prices continue to fluctuate between their aforementioned highs, passing up and down through the various support levels. Asia was unexpectedly identified as a potential beneficiary of the possible expansion of European purchases of Russian gas. As Investing.com writes, citing Morgan Stanley analysis, the return of Russian pipeline gas or Arctic LNG to the European market will weaken global competition for LNG, which will lead to lower prices. Asia accounts for 2/3 of global LNG demand, and almost 80% of the projected demand growth through 2030 is going to be in Asia. Morgan Stanley forecasts that LNG prices in India will actually steadily decline to around £9.5 to £10 dollars per British thermal unit by 2026, was 30% below current prices. I mean, India, China and Japan are still going to be the main beneficiaries of these developments and the lower prices of LNG. I mean, cheaper gas could actually be a key transition fuel for power generation in the region of Southeast Asia and India. The debate over whether the region will abandon gas for renewables could end in favour of gas. I mean, Morgan Stanley estimates that natural gas use in India, the Philippines and Vietnam could increase by over 50% over the next 5 years, and reducing the reliance on more expensive or polluting fuels such as coal. However, while a potential return of Russian gas to Europe could contribute to a global LNG glut, Morgan Stanley analysts warn that any return is expected to be gradual. I mean, even if political developments allow Russian exports to start again, their impact's likely to be limited in the near term, with significant volumes not expected until after 2026 or even later. It's a matter of an uncertain future. I mean, the rise in gas prices in the EU is happening today. Now, a leading analyst at AM Markets, Igor Ragurev, confirms that against the background of possible negotiations, the prospects of resuming Russian gas supplies to Europe is being discussed. This may lead to a decrease in energy prices, but it's causing political and environmental discussions, especially in the context of the investments into so-called green energy and renewables. I mean, according to the International Energy Agency, global natural gas markets will remain tight in 2025 due to the continued demand growth and slower supply expansion than before the pandemic. I mean, the IEA also expects global demand to slow below 2% in 2025. In addition, Asia's LNG exports are expected to reach their lowest level in 22 months in February 2025 due to a mild winter there and high spot market prices. This in turn could impact the global balance of supply and demand, particularly in the light of the surge in LNG imports into Europe. According to Guriev, prices have fallen below $500 per thousand cubic meters, and they could continue to remain volatile in the range of $450 to $550 per thousand cubic meters over the next few months. Mikhail Zeltser, who's an analyst at the stock market or broker BCS World of Investments, notes that the historic volatility of the stock exchange prices for gas, and pointing out that European Title Transfer Facility hub had the 2-year highs of $630 per thousand cubic meters and is now back at the breakthrough rate of $500. I mean, concerns about possible interruptions in gas supplies to Europe are temporarily receding into the background as the focus has shifted to the likelihood of a geopolitical rapprochement between the US and Russia. Consequently, prices are falling against the backdrop of the narrowing risk premium. Well, we shall see how that one works out. Plus, the increase in imports of American LNG is not a sustainable factor in stabilising prices, since the continent's infrastructure is not yet fully equipped to receive liquefied gas. I mean, after all, the Eurozone economy was sharpened for pipeline gas from Russia for all those years. Now, a 20% drop in the rate from the peak is not a cause for concern, because this is normal exchange volatility and happens when you've got the speculators in there. I mean, I think the trend is going to be strictly upwards, so a rebound up from $500 is certainly going to possible, if not definite. Fundamentally, uncertainty remains on the external contour, and gas reserves and European storage facilities are much lower than the seasonal average. 43% against the EU standard of 90% is a factor for the gas price bulls. That said, the correction may be short-lived and that the gas rate of the hubs will regain the upward trajectory. So the EU's best efforts to give up on fossil fuels has been a complete failure. So, as usual, the EU and Russia and gas continues. Thank you for watching. Please like and subscribe, and I'll see you all again soon. Thank you.